Good morning, everybody. Welcome to the game plan and happy Friday to each and every one of you. All right, we're here at Verified Investing. I'm ready to go through the data, the key movers, the key trade levels of the day, stocks, commodities. We'll look at Bitcoin. We'll look at gold, natural gas, and oil. All right, so overall, what are we looking at today? We're looking at a market that has continued to rally all week long. The question is, can it confirm above the all-time highs? All right, let's step over here and take a look. Usually we look at the S&P 500. I'm switching it up today to look at the NASDAQ 100 just to see what we're doing in the pre-market. And we can see here we had this big kind of surge end of day. It's very unusual surge. Not really sure what was going on there, but essentially a big surge on the last 10-minute candle of the day from here to here, right? So from this low all the way up there, that's where the market ended on the day, really coming back and closing essentially green on the day. And then since then, it's been a lot of sideways action, right? And if we look at where the markets are on the NASDAQ 100, we're essentially heading into the open basically on the flat line, give or take up or down just slightly here, as there's no major economic news. Now, yesterday was extremely light volume, and you might say, well, why was it light volume? It was a Thursday. I mean, it wasn't a holiday, it wasn't anything like that. And I think the kicker is this, is that today could be light volume as well. All eyes are now shifting towards next week when the Federal Reserve will announce their interest rate policy, and also the mega cap earnings companies, the trillion-dollar companies, they will be reporting earnings. So I think, again, you're kind of getting a lot of money to just, the big money is just kind of sitting back while the smaller retail investors continue to push money into the market, into risk assets. All right, so that's what we have right now going on pre-market with the overall markets. This is the NASDAQ 100 chart here, and I'm drawing your attention to a trend line here that we are coming up into. So keep an eye on this line here, right through these low pivots on the NASDAQ 100, right through here. We finally, look how we came into it. We tried to break, it bounced, it then broke, retraced to the line, which then got rejected, retraced here. The question is, does it get rejected again? You can also see the double top looming large right here, and the S&P is right there as well, right at its all-time high double top. And again, the S&P actually closed above. The question is, does it confirm? And remember, the confirmation signal, to me, that's the kicker. That's the one that tells me it's not a fake out by the big money, that they're not going to slam it down, but it actually could create a move to the upside that continues. So again, we'll be watching that on the S&P. But on the NASDAQ, we haven't even achieved the all-time high here. That is right in that vicinity, a little bit higher, and we're stuck right under this level here. Again, do we get rejected and start coming back down? If we do, this is the line to watch right here. Why? Well, because it's the lowest point on the dip. So as long as that lowest point holds, things you could say, okay. It's trading between this area and the all-time highs, kind of a sideways channel. If you violate here and you start closing below, that's when the floodgates for sellers will open. You'll see the algorithms start to unload more and kind of that next leg down take hold. But right now, again, keep an eye on this upsloping trend line that is merging into that double top on the NASDAQ 100. All right, we do have a bunch of movers today. So again, we'll have to take a look at these movers. Earnings, again, starting to come out. It's not the flurry of earnings that we're going to see next week, but certainly we do have some interesting stocks. The first one to pay attention to here is Texas Instruments. They reported earnings yesterday after the bell. You can see initially the stock popped, then dropped, and is now just chopping down about 4% on the day. Now, 4% doesn't really get me out of bed. It's not something that I'm going to say, oh, this is going to be a great trading opportunity. I usually like to see the bigger moves. But if we zoom out and we just take a look, I do have two levels down here. If the stock really starts to flush, right around 185, there's an upsloping trend line going back from these highs to this area to this low, right through that low. So that 185 level would get my attention, and then this double bottom pivot low at around 181. So those will be the levels that I kind of zone in on today as trading opportunities. Now, if the stock did reverse, which right now it seems unlikely, but you would be looking at maybe a level around 206. But right now, that's not on the radar. Intuitive Surgical, this one was an interesting one going into earnings. You looked at this chart. Would you assume it would go up or down on earnings, right? So up or down, you can see it's at the high end of the parallel. You would assume down. You would be slightly right. It is down on the day here, so you can see it is selling off on earnings. And again, the reason why I say slightly is it's not a big move, right? It closed yesterday at, let's see, it closed yesterday, it looks like around 608. It's trading at 595. On a $600 stock, that's not a big drop, but it is down still. And again, the beauty of this is you had the parallel here. Notice the loaves of the parallel right here, the line here, and right through here. You drag it to your highest pivots right there, and that's where we were trading on the daily chart going into earnings. This is one where, again, if you talk about probabilities, essentially this would be one where you would say there's a very high chance that it sells off on earnings, probably to the tune of 80%, and it's following suit with that, albeit it's not a big sell-off. Novo Nordisk today is talking or up some key weight loss drug data. Now, what's interesting about this one, if we look at the daily, and I always like to draw people's attention to this, is this stock beaten down or is it at all-time highs, right? So it's obviously beaten down clearly on the chart, and these are the ones that I like to play. Most people get scared by this. They want to be in the high flyers. They want to be in the hottest names like the Eli Lillys. I actually avoid those because those are already priced to perfection. The kind of the concept of investing that I go by is I want to find quality names that no one likes anymore or that is discounted because of various things. That way, if they just report the slightest positive thing, the stock can make a move up. And that's what we're seeing on Novo Nordisk today. Beautiful rally here on this drug company on weight loss drug data here. Now, it's trading around 91. Is there a tradable level on this? So the short answer is not yet. It's beaten down. You have to be very careful trying to short beaten down stocks. The only level I would probably start to nibble at is if intraday we rally into this gap fill here. That would be at 103 and change. It's quite a substantial move up. There is a level here. I might take a look at that at the 100 even number, but either way, we're still talking about the stock needing to rally basically another 10% before it even gets close to a level to short. American Express. All right, so this stock is holding steady here. It dumped out initially on earnings this morning, coming back up. Now, this is another one where I look at the chart, and if you go into earnings, and interestingly enough, I did short this pre-market going into earnings. Now, I don't do that very often, but again, it's all about a risk versus reward. And I was saying to myself, and by the way, when I did a very small position because it's still risky whenever you kind of go into earnings. Even if you have a good chart setup that's 80% success rate, like I would say this is, you go into earnings and you say, well, yeah, but if that 20% proves me wrong, I could take a big loss by a massive move up. So I always go very light if I ever do that, and the chart has to basically be a golden chart. Now, the kicker here is this, and I actually think this is going to be the short of the day potentially, and the reason is because first of all, they just met earnings. They just met revenue numbers. Their guidance they didn't really raise. And so for the stock to be trading flat when it was priced to perfection on numbers that are just essentially in line with estimates, that's something that I start to pay attention to going into the day. And I say, this could end up being down $10 or $15, $20 on the day, just based on the fact that those numbers were good, but they weren't as good as you would assume it would have to be, especially looking at the resistance, right? So we know, and you can see very clearly the parallel here, right, all the way through these lows here and here, and then these highs, right, all through these highs. I mean, this is a classic long-term parallel, and look at where we were trading right into earnings. Now, again, no guarantees, but for me, I would be looking for a fade off of this high pivot or that high trend line to the downside, whether it's today or next week. Who knows? I would think it would start today, but again, the upside risk is relatively small based on, again, the chart, and the downside reward seems pretty solid on an intraday basis. So we'll keep an eye on American Express. I think that's one that, for me at least, is very interesting. Another one, now this one's a little crazier. This is Constellation Energy. Now, Constellation Energy, and we'll walk over and talk a little bit about it here, but Constellation Energy, basically, this is a company that is a utility. Now, it's priced at about, I think I was looking at it, it's about a 12 or 15 times forward revenue. I mean, it is priced like an AI company. Now, the reason why these stocks have been so hot, VRT, GEV, which is GE Vernova, other utility plays, is because essentially the data centers are expected to need so much power that these guys have to start building out additional power sources, a la nuclear energy. But look at what we have here on this chart. The stock, again, has a beautiful parallel. These parallels have guided me to so many profits throughout the course of my trading career. You can see right down here, right here, and here. Look at that parallel. Now, what's amazing about this is from this date here, which I think was January 13th, or 12th. Basically 2 weeks ago, this was trading at $230 a share approximately. It topped out yesterday at $352. That's about a 52% increase in just that short time. So when you get these vertical moves, oftentimes you'll see a good solid retrace of a beatdown, right? It basically runs out of steam, runs into the key resistance level, and does a simple retrace. And these are the kind of opportunities that I look for on a swing trade basis to take advantage of. And again, I always play it safe, and when I say that, what I mean by that is that I'm not going all in here. I'm nibbling. I put essentially the equivalent of one toe in the water on the short side of CEG, and if it goes up another $15, I might add another toe, and then another, essentially slowly DCA, knowing that the more extended it gets, the more bubble-licious it essentially gets, and eventually you'll get that big pullback. My job as an investor or swing trader is to keep my dollar cost average in the general vicinity. It doesn't have to be there. It could be 5% out of the money. It could be even 10%, because when this corrects, it should be 25% correction, a major drop to the downside. So again, I love these type of charts. The great example of how parallels can work to our advantage as swing traders. Again, doesn't guarantee anything. We know that. This is just probability based, but probability is now telling us that CEG may look to pull back. Okay? One other stock here that I wanted to go over is Twilio. Twilio upping guidance and announcing a share buyback. The stock is surging this morning. Now, this one's a tricky one, right? Because if we look at this chart here and we zoom out on it, you can see that, yeah, it looks like it's trading vertically up into this news, but in fact, you had a bullish consolidation here. But if we zoom out, look at where this thing was trading back in 2021 at $450. So sure, it's up to $135 a share today, but the question is that even overbought yet? I mean, considering. Now, I was looking at levels, and I was like, man, how do you find a level here? So there are levels. One of the ways to do that is to use your fib, right? You take your all-time high and you go to your lows, and you drag that across. And again, I don't have my 238 or whatever it is, but that's down around the 140 level. There's a 140 level right in here that I'm looking at, and then you have your 382, which is all the way up at 200. But again, you start to get into some of these little pivot points. We're above this one, so then you start looking. There's a gap fill around 166. There's a couple other levels, but suffice it to say, per the analysis that I'm doing, I'm going to be looking to potentially pull the trigger on a day trade short only. No swing trading here, folks. This is not extended enough to swing trade short, in my humble opinion, but looking more around 140 or just above for a potential day trade. All right. Let's get into gold here. Gold is rocking and rolling, continuing to push up to its all-time highs. And again, I think the kicker here is just to understand that gold seems to be going up when the dollar goes up. It seems to be going up when the dollar goes down, especially when you have Donald Trump making comments about he's going to force the Federal Reserve to lower rates immediately. I mean, that just builds instability in the system, the questioning of the Fed, and it basically makes money, and we're talking even central bank money, start to move more and more into gold. And central banks have been the biggest buyers of gold for the last couple years. That should all tell us something about what fiat currencies could be doomed for, right? So again, looking at this on a purely short-term technical basis, we have a classic double top. We are getting very, very close. In general, you would assume a hit or a pierce, and then you get some sort of small retrace. And if you get a bull flag from that, then you start saying, okay, bull flag, next leg up coming. I still think we're above $3,000 an ounce on gold by year end. Again, so very, very nice there. GDX, gold miners doing really well. All of these other players are doing well. Newmont Mining starting to catch a nice move up after getting beaten down for quite some time. And again, the miners, as gold goes up, they should do very, very well. Absolutely. All right, let's look at Bitcoin real quick here, guys, as we go through. Let's take a look at BTC, USD, and Bitcoin right now not doing a whole lot here. It's just really chopping around. Again, you still have your double top here, which is your key resistance zone right here. These two lines continue to be resistance. There's a new line I put on, which is just my kind of guideline, meaning that if price breaks here, it ups the probability that it's going to have a bigger drop. If it holds here, it's more of a neutral, right? It's between this line and this line. But again, watch. If we can get above this, we certainly should test up here. And then if we get below this, then you start your next leg towards that 92,000. But really, again, since essentially a week ago, Bitcoin has almost done nothing. It's been pretty volatile, but when all is said and done, it's a whole lot of sideways chop. All right, next up, let's look at silver. Now, silver's actually starting to look a little bit more interesting to me. I've been talking about this with you about how silver has been kind of a laggard, right? It's been underperforming gold, and it is still underperforming gold, but there's a few positives that I'm starting to see. So number one, we have the wedge pattern. It broke out and it confirmed. Okay, so that's good. That means this orange line is major support, and it also has this additional support here. What I'm starting to like on silver is that this sideways action here is building what type of pattern? A bull flag, or in spirit of bull flag. And so that's good. And listen, it still is underperforming gold by a mile. There's no doubt about it. But at least you've got the confirmed breakout and now a bullish pattern. What we need, if you're a silver bug, if you're looking at silver and you want silver to go up, you need to get some good news out of China. I mean, that's really the kicker. The U.S. economy still is doing fine. It's China that is keeping, in my opinion, silver, nickel, aluminum, like a lot of these other metals, copper even. These are the metals that need the growth from China to suck up that industrial demand that would then trigger silver to have that bigger move up. But the chart is certainly looking better than it was just a few days ago. Again, it's still not as good as gold, but remember, gold's actually coming towards resistance. This does not have any resistance until up here at least, so there potentially could be a trade here. The other thing to keep an eye on here is that if you wanted to, you could keep your stop very close. So essentially, you could either use a confirmation below this orange line or in the very least this yellow line. Any close below here, you just exit the trade, right? So again, there are ways to mitigate risks of the underperformance of silver by keeping a stop at a specific technical level. And that can, again, limit the downside, but allow you to participate in the upside movement should silver start to take off. All right, quickly going over just a couple other charts. We always go over our oil chart here. So as the stock gods or commodity gods would always do, what happened here, right? So this is, by the way, we're still in the money on my short trade, fine. But you got to just chuckle, right? So here I am for the last, 3, 4, 5 days being like, all right, guys, here's my target where I'm going to take half off. So what do the stock gods do? They say, all right, well, we're going to bring it really close, and then we're going to give it a little bounce just to tease them, just to mess with them. That's okay. I'm used to it at this point. Trust me. Every day in the trading room, that happens to us in day trades. We're like, all right, we're looking for this, and then it comes within a penny, and then it bounces or pulls back. That's okay. Ultimately, I do still think it will turn back around and tag here and eventually go lower, but I just wanted to point that out. The other thing to keep in mind, too, is that after a certain amount of down candles in a row, there's the odds of a bounce start to increase because you look at RSI, you look at other things. I mean, other things are getting more and more stretched or oversold. And so you had 1, 2, 3, 4, 5, 6 reds in a row, 6 down days in a row on oil. I think common sense would all lead us to say, yeah, it might be due for a small bounce. Doesn't mean it's not going to go like that and come back in, but at least a small bounce is due. All right, so again, still net overall bearish on oil, but getting a small bounce off this range. Also, there is a little level right in here, so you can see all this chop here. That's also adding to the support level on that. All right, next up, lastly, we'll take a look at natural gas, which again, nat gas has been kind of just chopping in this range. But what's interesting here is we are getting close to, again, tagging and potentially breaking this line. Now, again, if you look at this, here it hit the line and then went away for a long time. Here it bounced along it, then went away for a long time, tagged the top, came back in, came up halfway or a little more. Now it's starting to jump on this line. The more you hit a line, the weaker it becomes. That's just the nature of charts. So listen, we don't know if it's going to break here. I certainly don't know. But the more it hits, the more the odds start to favor a breakdown on natural gas. So again, I have no trade here at this point, but I just want you guys to be fully aware that, again, the more you hit that line on nat gas, the more likely it does break to the downside. All right, it's been a fantastic week, guys. Great levels, great trading opportunities out there. I will be back, as always, Monday morning to give you guys the latest. I'll actually be away, so I'll be doing it from probably a hotel room, but I'm still going to give you guys your game plan, and then we have trading the close covered all week next week as well. So we won't miss a beat here at verifiedinvesting.com, making sure you guys get all the data, the key trading levels for the day, and really the important insights, not the nonsense that social media is pumping, not the nonsense, the narratives that mainstream media are pushing, but what is the data telling us, giving us probability so we can make logical decisions and put ourselves in a position to make money most of the time. Not all the time, just most of the time. All right, you guys have a great one. Happy weekend to all of you. I'll talk to you soon. Take care.